What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is June 3rd of 2022. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, we're going to be kicking off a topic that I like to call the Bitcoin storm, or the chop zone, if you will. And this is a period of time after a severe move to the upside or downside in Bitcoin's price, where we generally see neutral sideways territory. In about a week's time, if we remain around this price range between 28,000 to 32,000, we will have been in an entire month of price action where Bitcoin has simply just pushed sideways. It hasn't really done much. And it's important to understand what to do during these periods, and more importantly, what to look out for in order to make sure we make the right moves, either to cover and protect our positions or to, in this case, hold out and wait for greener pastures. We've got a lot of things to dive into today's video. Let's go ahead and kick things off here. Now, I understand overall, guys, it's been a pretty nerve-wracking time. It's one thing to go through the correction that we went through in the markets, this kind of bloodbath for both Bitcoin and altcoins. It's another to, when you expect probably for it to rebound, to have to sit here and wait for it to build some kind of foundation in order to move higher. Or even worse than that, not knowing if and when there may be a more severe correction afterwards, a retest down to this 25K range or worse. That's what I know what is on the minds of a lot of people out there. And it's a completely justifiable emotion to have when the market's not really giving you a trend after such craziness. We usually expect markets to move in one direction consistently or to revert course and start a new trend in the other direction. But sometimes you just simply have to be patient and wait for the right signs to showcase in order to either continue with your conviction if you're already long on your positions, or if you're waiting to buy the dip, to follow the signs in order to find that correction. Now again, it's best to be as non-biased as possible, to take in as many inputs as possible. Now, you guys know that what we've talked about here on the channel, a lot of the models that we look at and some of the metrics have signaled that we're getting very, very close to a long-term bottom here. Again, if you take a look at the majority of the metrics here, like we did, such as volume analysis the other day, as well as taking a look at things like the RSI and a lot of metrics that help you get a range on the longer term timeframes. If we're looking at the 2-week, right? At a minimum, the weekly timeframes, we can see here that the market is in oversold conditions, the like of which we have not seen since previous bear markets, right? Since those previous 80% drawdowns in price. We haven't gotten to these kind of oversold levels since then. That's not only important to keep in mind, as well as the data science models that are showcasing us that there is major accumulation going on here ever since this correction has been playing out here. The 1-year HODL wave picking up from 54 to 66%, nearly 66% here as the time of recording, which is a new all-time high for this metric. All of that is great. But we sometimes need to analyze the short term in order to spot whether or not there's going to be a trend reversal or a trend continuation. And there's a whole range of different metrics we can utilize in order to track that. There is a new tool, on the other hand, though, that I'm extremely excited about. All the while, you guys know I do not like to promote leverage trading here. I don't like people, everyday people using margin in the markets. I really recommend most people avoid it because it ends up being a net negative for most people. All the while, we need to understand that this market, which has been increasingly driven by leverage and people borrowing and taking on additional risk, that liquidations, which have driven a majority of the sell-offs and parabolic rallies in this market that have sometimes even outpaced previous mid-cycle rallies and previous bull markets, completely breaking the norm, liquidations on both directions are playing a major role in where price is going to go. And it will exacerbate rallies and corrections. In today's video, I want to spend some time to dive through our partner tool, Bookmap, with one of their new exciting tools. You guys know I've loved to cover cumulative volume delta. I like to track the multi-book order book where you can see all the bids and the asks to see general price support and resistance, all these metrics. But none of them can be as powerful as the liquidation tracker, okay? Now, the liquidation tracker is a mechanism that tracks on any given market pair. We've got a few of the major futures, perpetual contract platforms. We've got Binance Futures here as well as Bybit here, two of the leading platforms here for derivatives trading. And what you can see here with a liquidation tracker is a gauge here of how many liquidations have played out over the given time frame that we're watching here. So before we understand why this metric is so useful, we need to understand how the game works, why liquidations matter in regards to price. And for that, we need to understand margin trading. So whether you're trading futures, perpetual contracts, or any other form of derivatives, all these fancy terms, essentially what leverage trading is at the end of the day is taking an initial position, let's say in this case, 1 BTC or 1 Bitcoin, and increasing your potential reward profile. So effectively borrowing positions off the market, borrowing additional Bitcoin. Let's say, for example, we want to use 5x leverage. So instead of the original 1x leverage of just holding 1 Bitcoin, we now get to borrow and effectively own temporarily 5 Bitcoin. And this sounds great on paper because if Bitcoin goes up 1% in its actual spot price, we make 5%. Sounds awesome, right? Well, unfortunately, if we get a 1% decline from our entry point, that also means that we've increased our risk profile. We would lose 5%. And this is the reality that unfortunately many people don't consider when starting margin trading. And worse off, if price goes down low enough or we're trading on such a high degree of margin and we get a decline in price, we can have what's known as a margin call and an eventual liquidation, where we lose not only the entire position, but we lose the original Bitcoin that we own. In this example, if price were to go roughly down around 18 to 20%, we would probably have a margin call and a liquidation, losing everything that I originally owned. The $30,000 Bitcoin that I had originally has evaporated. And essentially, what you've got here is the exchange walking away with that Bitcoin. They can force sell your positions. And that's exactly what we saw here, continuing to weigh in to the actual spot price here for Bitcoin. There's no coincidence here that as market order flow is going to the downside and we're getting these liquidations, that afterwards, once there's a flat line here across the exchanges when it comes to liquidations, that price starts to move higher. Now you might be asking yourself here, why is this? Why is it that we're seeing this correlation? And sure, it's for sell side pressure, but why does price rebound right afterwards? Well, the unfortunate reality here, guys, is that the entire system is built to trade against you. I don't want to scream market manipulation, all these terms and stuff. It is part and parcel here with a market that has gotten over-soaked in risk and derivatives. And to be honest, we have a little bit to blame of ourselves as well. When you are leverage trading, you need to understand here that unless you're able to properly conduct risk management, have additional collateral on standby, and keep margin levels minimal and use it at the right times, the exchange will easily trade against you. They want you to get liquidated. You guys probably have realized a lot of YouTubers out there who have referral links to Bybit or these exchanges that we're talking about here in the sense of the liquidation tracker. And they want nothing more than you to get liquidated because that's the monetization model. They're not here to collect small fees for trading. They're here to collect liquidation fees. And all those content creators who promote those links, they make a buck when you lose your underlying position. How terrible is that? Right? And this is, again, while you guys may agree or disagree with me here on the channel on technical analysis, things like that, I hope you can see that all the while it's a great way to make a ton of money, it's not a morally ethical thing to do. And it showcases here just how painful it can be for the space. I mean, just take this, for example, window of time here. And this is less than 30 minutes here worth of price action. And we can see here on the Binance futures pair, right? At the time in this case, 4 BTC liquidated just like that. And on top of that as well, we've got on Bybit here, even worse here, right? 3.9 BTC here, a much smaller exchange here, coming in and liquidating a ton of players on the market, right? This is hundreds of thousands of dollars being stripped away. But putting all the kind of negative elements aside, we have to consider it is what it is. It will play a role in this market. But the crazy thing about it, take a look at price here, is right after those liquidations start to flatline here and don't continue after some period of time. Notice we get an acceleration of price. We see Bitcoin move up 100, 150 bucks. People buy in to capitulation. They like taking the opportunity of buying in at a discount caused by excessive liquidations in the market. And this metric is an important one to keep a track on, no matter if you're trading in the really near short term, if you're like day trading, but if you're also swing trading on the long-term time frames. And it's why I think it's an incredibly powerful tool that not only you guys should definitely have in your arsenal when you're tracking the markets, but will also utilize from time to time here on the channel. Now, if you guys do want to get access to Bookmap as a platform or the liquidation tracker, I highly recommend you guys first download and try Bookmap, give it a go, see how you feel using it. Use some of the kind of free tools like the order book, as well as the CVD, the cumulative volume delta, and check the heat map, see some of the basic features. And if you guys want to get your hands on the liquidation tracker, you can sign up for one of the paid plans in this case that will give you access to that liquidity tracker. I'm gonna have a link down below in the description where you guys can check it out. You can get 20% off your first month. But if you're interested in seeing how we can start to utilize the liquidation tracker and trading strategies, I highly recommend you guys go ahead and set a reminder for the upcoming webinar I'm gonna be doing with Bruce from Bookmap, where we're gonna be talking about how I utilize both market order flow through the cumulative volume delta, as well as the new liquidation tracker, which I've been kind of keeping behind the scenes and stuff for the past few weeks as the team has been working on it. They've been really keeping me involved in the process. I love the features that they're building. They're constantly shipping valuable products for traders out there. And if you guys are interested, definitely go on that video. I'll put a link down below in the description. Hit that reminder bell icon, and I hope to see you guys there in the webinar with some great questions. Okay, now I want to go ahead back here into the conversation and again talk a little bit about the chop zone here. How can we utilize this liquidation tracking in order to spot when a reversal is coming in? Now, the important thing here is to keep a neutral sentiment here when we're in these channels. All the while, you guys know that I think we're at a generally kind of oversold period of time. We can see here that price has not picked up direction either way. And so far, because of that, we need to keep neutral. We need to cut out our biases no matter how we're positioned and know what we need to do on our existing positions where we've got our bets in case things go the opposite way or go the way we want them to. Now, the important thing here to determine is to watch out for excessive liquidations when we get in towards the upper band or lower band of our given channel. So for example, if we see price ticking back up here towards the $32,000 range over the coming days, and we start to see a heightened amount of long liquidations here. So instead of the kind of red decline here, we start to see it going above the 0-point range, a lot of green liquidations, which means we're seeing a short squeeze, we're seeing an uptick in price, knocking out those longs, effectively accelerating the short liquidations, which is putting on positive price pressure for Bitcoin. That's going to be your telltale sign that we've got a breakout where we can potentially make support and continue higher here. But on the other end of the spectrum here, we could also see here that as we visit towards this lower band here, as price starts to come down, we could see a breakdown below that range and an acceleration lower here. And again, just like we did with the longs here, we're going to be looking here to see whether or not we get a cascade of liquidations to the downside. And the way to look for this again, all the while we don't have it kind of mapped out here, would be that over time, right, we'd want to see a continued domino effect. Effectively, we see a continued decline here. Price is continuing to roll over, and we're getting an acceleration of upper double-digit to triple-digit liquidations on any given exchange pair. Really, when we go through those capitulative events that signal that the market is getting oversold here, people are getting knocked out of their positions, people are under collateralized, the exchanges need to cover, which is likely going to drag us down to this price range, or vice versa here, drag us back to maybe where we were in early May before a lot of the brutality of the May correction hit in. Okay, so that's what we're going to be watching for here. We're going to be watching for this. We'll talk a little bit more about it on the webinar, so I highly recommend you guys join in for that. But I think it's a really important thing to keep in mind here when you guys are doing technical analysis. It's one thing to look at price action like we do. We like to follow the support and resistance, higher lows, higher highs, lower lows. We love data science models. We take a look at the whole shebang, anything but the headlines, right? We want to follow what price is telling us, what the market is giving us information on. And right now is not the time to be too opinionated on where price is going. We need to keep an eye here on what's going to happen when it comes to the players on either side of the market getting forced out of their positions, thereby where market order flow takes suit and the trend starts to really take a certain direction. It'll be exciting to see. I think we've got something coming around the corner here, guys. And if you guys are interested in checking out more content here on the channel, definitely consider subscribing, hitting that bell icon. And if you guys want to leave a comment down below, would love to hear your thoughts on what you think about the market. That being said, thank you all so much for watching. Have a fantastic day wherever you are, and I'll see you all in the next one. Take care, everyone.